when you look around, there's 160 plus different currencies. Each one's like a little currency bubble, and they're all devaluing at different speeds. So some of the most robust ones grow at 6 or 7 or 8% money supply growth a year. Many of the developing country currencies grow at 15, 20%, 25%, in some cases more per year. And people are just kind of constantly getting diluted. And so they're constantly on a treadmill where you have to constantly try to earn higher wages. You have to constantly figure out what you're going to do with your savings. You can't just save it, you have to invest it. And so that's like a treadmill that everyone's on at different speeds.
Lyn Alden is a renowned macro analyst and the author of Broken Money, a thought-provoking text that explores the history of money through the lens of technology. In the book, Alden essentially explores the broken state of the global financial system and how it is impoverishing billions of people around the world while continuously and rapidly enriching the top 1%. Alden also discusses how in the modern era, energy abundance and technological enhancements have enriched and broadly improved all aspects of our lives, with the obvious and painful exception of our outdated monetary system. Man has walked on the moon, made countless remarkable medical advancements, and performed many other gigantic feats, yet we are still stuck with the same debt-based fiat system that has been proven to have a 100% rate of failure. Fiat currencies have no intrinsic value and are mainly backed by the faith people have in the issuing government. But that faith begins to rapidly decline when the issuing government prints at will over and over again until the currency is no longer scarce or acceptable to the public. There are lots of examples of currencies that have been completely inflated away and have almost no value left. The Lebanese pound, Zimbabwe dollar, and Venezuelan bolivar are some of the examples that come to mind. Plus, there are countless other currencies, mostly from emerging economies, that are almost at that point too. According to Alden, the United States dollar and other major currencies still hold a lot of value compared to weaker currencies, but with time, these weaker currencies will cease to exist and the dollar will become the next bolivar or Lebanese pound. This is why sound money enthusiasts like Alden have been advocating for a return to a sound money system centered around something like Bitcoin, the world's largest cryptocurrency with a fixed supply and many other important qualities that Alden says make it the only viable replacement to the current fiat system. We will now bring you clips from Alden's recent interview as she discusses what a Bitcoin standard world will look like and the urgent need to transition to one. Please watch the video to the end, subscribe to the channel, and turn on post notifications for more videos like this. Thanks and enjoy.
So there's nothing on my horizon that really stands out other than Bitcoin. Specifically, you'd have, the blockchain combined with having the most decentralized type of it. So small nodes, proof of work, that seems to be the most robust way to do it. And then also, when you have the network effects, the liquidity, your network's now big enough to kind of stand up to pretty challenging attacks. Anything that so far that kind of uses other methods has a central hub, and that central hub is attackable. And so some of the examples I use in the book, there is a firm that people could have accounts denominated in gold ounces, for example, or gold grams actually, and you could just easily trade them around, and you could do all this. And then the government just kind of shut them down. And of course, we've had some emerge since then, but really it's a chain of credit, and so it's not fundamentally solving the problem. I think Bitcoin fundamentally solves the problem because it creates a whole new ledger that is actually at the root about as decentralized as we can make it. There's still, there's like supply chain concentrations to maybe kind of try to make a little bit better. There's still a handful of kind of attack points that are maybe not 100% decentralized, but it's the most decentralized thing I've seen, and I think that's the best shot we have. Now, in other countries, I think stablecoins are serving a similar purpose, which is that if you're in Argentina, or basically if you're the Argentinian government, there's very little you can do about stablecoins getting in and out of your country. Now, the United States could go after stablecoins if for some reason they decided they didn't like them anymore, but Argentina can't, or Nigeria can't. And so for people in those countries, the fact that there's a central hub, but that hub is outside of their jurisdiction, and it's able to kind of pierce in there peer-to-peer, that's the main thing that these technologies do, is that with all these little 160 different currency bubbles, really the only two ways to bring money in or out are physical ports of entry, which of course are heavily surveilled, and you can only bring so much cash or gold through an airport. And the other one would be wire transfers, basically various types of bank transfers, or fintech overlays, which are still just essentially bank transfers. And those are also heavily controlled by government regulation. Whereas Bitcoin, stablecoins, similar types of assets, you can show a QR code on a video call and send money. You can send someone an email with money. You can DM with money. So as long as they're not like shut off from the world like North Korea, you can send money in and out. You can memorize 12 words and just bring any amount of value density through an airport. And so that's just a world that technology exists now. And the ones that have central hubs can pierce into most countries. And if you're going to go after the biggest markets of all, I think you have to be decentralized at the root, which is, Bitcoin is the closest thing we have.
Last month, the national debt of the United States hit a massive $33 trillion. America now counts as one of the world's most indebted countries, with liabilities that amount to about 130% of GDP. According to Trading Economics, we will go above the much-dreaded 130% debt to GDP ratio by the end of this year, and everything will just keep compounding and spiraling out of control after that. Over the past few months, there have been lots of warnings from the U.S. Congressional Budget Office, which only last year warned that the United States is on an unsustainable fiscal path. The economic and financial problems will only keep compounding until we can no longer push this off and the US dollar is on its way to becoming the next Bolivar. During the interview, Alden also addresses the issue of critics who believe that since the dollar is the world's reserve currency, we can afford to print as much as we like for as long as possible without any serious consequences.
Back in the late 80s and early 90s, that's when concern about the debt kind of reached a peak level. That was like the zeitgeist of the time. So the famous like debt clock went up in the late 80s. Ross Perot ran the most successful independent presidential campaign in modern history, running mainly on the debt and deficit. And so that was like an era. And if you look at the interest expense as percentage, well, both in absolute terms and as expense as a share of the economy, that makes sense because it was like soaring. And so people were like looking at this and thinking this is literally it's going to go like Weimar. This is completely unsustainable. But what a lot of people didn't expect is that we would soon enter a 30-year period of very strong disinflation. And so, China started to open up to the world in the 80s and really kind of accelerated that in the 90s and 2000s. Soviet Union fell and opened up resources and labor. The whole block opened up. So basically, we took Western capital, combined it with Eastern labor and resources, and you just had a pretty unprecedented period of productivity growth, globalization, and that was very disinflationary. And that allowed interest rates to go down much lower than anyone could have imagined in that era. And so even though we had higher and higher debts and deficits the whole time, it was offset by ever declining interest rates. But once we hit zero and kind of chop along for a while and then bounce off zero because there's more fiscal activity and demographics are getting worse, now we're kind of going back to that late 80s, early 90s period where interest expense is now rapidly accelerating. And even if you don't keep increasing interest rates, even if interest rates now are just in a sideways pattern between 0 and 6%, the fact that we're still adding more and more debts and deficits there's no longer an interest rate offset, let alone if you start to have structurally higher interest rates. But basically, that is now rendering it more acutely unsustainable. And so we have huge interest rate driven deficits, and it's no offset. And it's actually more of a US phenomenon than the rest of the world. Japan's in that situation, US is in that situation, Europe's more mixed, but they also have slower growth. And so it's really something that we're seeing a lot in the developed world now. And I think people have spent the last 30 years becoming too complacent around it, and assuming that kind of golden era of peace and exponential kind of productivity gains are going to last. And even if the world doesn't get more chaotic, even if we avoid World War III, even if we don't, decouple from China, if the mere fact that we don't continue to accelerate in the way we have, if the status quo just starts to kind of stagnate and we kind of, we already tapped into a lot of that labor arbitrage and that resource arbitrage, and we just kind of hold it steady, that means we still have no offset mainly to what just happened. Now, there still are some AI and other things like that can still provide a very strong disinflationary impulse. But actually it goes back to the prior point of energy. I think ultimately energy is the big constraint here in terms of the ability to run these big fiscal deficits structurally without the interest rate offset in a world where energy is not getting remarkably cheaper.
Alden believes we are at a point where the transition to a sound money system is completely inevitable. It might not seem too obvious to everyone right now because citizens in emerging countries that have weaker currencies are able to temporarily depend on stronger currencies like the US dollar. But these so-called strong currencies are not without problems of their own. They are also getting inflated away, just not at the same pace as these other currencies. But someday, when we need to print even more and more to meet our massive debt obligations, the rate of inflation will really speed up until the world can no longer depend on even the dollar to maintain wealth. When that day comes, and according to Alden, it will be much sooner than everyone believes, the world will unanimously turn to Bitcoin to maintain and increase their wealth. Please share your thoughts on Alden's interview in the comments section below. Also, ensure you give this video a thumbs up, subscribe to the channel, and turn on post notifications for more videos. Thanks for watching.